start again. Also, we are starting a bi-weekly lunch training program called McColly Prep, and that will commence on October 1st. This will be online training that will take place during lunch hour. It'll be a half hour every other Thursday, and you'll be receiving more details via Connect over the next couple of weeks. Fast Start. Our Fast Start is up and running and new and improved. It's scheduled to be held virtually on October 7th, 8th, and 9th. I've been told that days 1 and 2, which would be the 7th and 8th, are especially for the new and experienced associates. So mark your calendars, and more information will follow via Connect. Super Sunday. Our Super Sunday is off to a great start. We've had 2 drawings so far. The first took place on August 9th. Ryan Pammer from the Cherville office hosted the winning open house. He received $500, and he had McColly donate $500 on his behalf to the Villa Lobos Rescue Center, which is in actually New Orleans, Louisiana. Byron Martinez attended Ryan's open house, and he received a check for $1,000, which made him very happy. And McColly donated $500 on his behalf to St. Jude Children's Research Hospital. Our second Super Sunday took place on September 13th. Katie Van Beek from the Cherville office hosted the winning open house. Katie will receive $500 and has chosen the Gastric Cancer Foundation as her recipient of the $500 donation from her and McColly Real Estate. Marcia Golas attended Katie's open house and will receive $1,000 and has asked that McColly donate $500 on her behalf to the Women's Center of Northwest Indiana. Our next Super Sunday will be on Sunday, October 11th. So mark your calendars for that. And last, but certainly not least, a big, super big shout out to Kathy Schultz and her staff at Community Title for celebrating 30 years as a Stewart Title Guarantee Agent. That's quite an accomplishment. And thanks to all of you for your continued loyalty and support of Community Title. Throughout the years, your business is very much appreciated. Next, I'm going to turn the meeting over to Drew, and he's going to give us the relocation update. Thank you.
All right, thank you, Rhonda. Good morning, everyone. How are you? Please don't answer. Keep it on mute. But yeah, so hope everyone's doing well. Big updates for the department. I want to congratulate everyone out there within the company, and we are proud to say that we have hit our goal as of September 1st for our closed outgoing referral. So we've already surpassed it. That said goal closing in on 60. We had a goal of 55, and as of a couple weeks ago we were 57, but we've closed some more since then, and we've surpassed the volume from last year. So huge congratulations to you guys. We couldn't have done it without you, with all the referrals that you send in, and we just want to let you know, the conversion rate is up as well. Our partners in Leading RE are more than holding their end of the bargain and getting these deals closed that you guys are putting out. As of right now, through August, the conversion rate of a outgoing referral closed is 57%. So that's more than 1 out of every 2 deals placed closes. So that's an amazing number. If I were you, it's just great confidence in the people that we work with, in everyone that we partner with and we send referrals out to. So if you have anybody that that might be buying, selling, wanting to in the future, let us know. We're more than happy to place that. And we also were named so far through August as well. We were most improved outgoing broker-to-broker closings in our category, which is category 5 out of 7. So and that's year to date. That's not just monthly. So again, huge congratulations to everyone that in the company that participates, and we just want to keep charging along and making sure that most improved is there through December. So thank you all. And just briefly, people ask, what is the best way to get outgoing referrals, and what are some tips that I can do in order to place those and get those closed, get some extra money? And really, it is just working your sphere, working people, especially obviously out of town, family, friends, anyone that you know that doesn't live locally here that that you personally can help. Let them know about the program. Let them know that we partner with who we partner with in their area. If you need any questions or need any recommendations of companies that people, just for an idea of what market they're in, please, I'm here at your disposal to reach out and let you know who is in whatever market you're looking to be in. And just keeping top of mind for them. Get them on an auto search. Not auto search, but get them on auto emails. Send them emails about markets, things that are going on with national trends, buying and selling, anything that's advantageous for them if they're looking to buy or sell or might be looking to buy or sell. Any good news that you could send them those kind of articles can help put them over the edge and want to give you a call and say, yeah, I need some help. So with that, if you have any questions on different types of programs that you can do, different types of auto emails that you want to set up, please, again, reach out. We're happy to talk to you about that. Now we want to move on to the drawing. So if we're looking through, if I call your name, could you just please unmute and say here, and then we will go ahead and we're going to draw on that. So is Jessica Burke here? No, Jessica. Okay. Is Deb Schluter in? Deb, that you? No. Okay. Roseanne Ballian?
Yes, I'm here. I'm here.
All right, Roseanne, here we go. We got these. We got we're not doing the envelopes, so we have it all marked down. So we're gonna go. So Roseanne, you got 100. All right.
Hey!
All right. Stacy Farley, I think I saw you log on. Stacy, still with us? Stacy Farley? I think I saw her.
Wait,
Okay.
I'm here. There we go.
Oh, AC 50. All right.
Woo!
All right. Is Kristen in? Kristen McCoy. No, Kristen's not. Okay. Sarah Myers-Lazada. No, Sarah. Okay. Bart Bakken with us. All right. I think we saw Bart. You got Bart? Okay. I see the name. Okay, Bart, you got 100. All right. All right, Bart. Actually, Bart's got 3 drawn. So here we go, Bart. Bart's a referral all-star. All right. Okay, we got Bart. 50. All right. Okay, we got one more. Bart, you got 50 again. All right. Okay, I think I saw Buck Tamblin's name on there. Good. All right. Buck, you got 50. Okay. Who's that?
Hey, Drew, I'm here.
Oh, Sarah. Oh,
It's
thank
Sarah.
you. Appreciate it.
Cesada.
All right, Sarah, we got you drawn right here. Another 50.
Woo! Thank you.
Tina Douglas, I think I saw you just sign on, Tina. Okay. You got 50. All right. George Georgefon. George Georgiev. Okay. Okay. Yeah, George, you got 50. Okay. All right. Tim McColly, is he on the call? He was? Okay. Tim McColly, we got 50. Is Katie Phillips on the line with us? Okay. Okay, there she is. Katie, we got 50 for you. Okay. All right, Stacy Zill's on. Okay, we're gonna go. We got Nick Smith. Nope. There he is. Okay. Okay. That's her. Nick, we got 50 again. Okay. Is Sue Satoski on? Not on. No. Okay. Moving on. We're almost there. We have Brenda Versnell. Okay. Okay. We'll go.
Brenda's
Emily,
here.
I'm sorry. Who's that?
Brenda's here. I just
Oh,
wasn't
Brenda.
quick unmuting.
No worries. Brenda, we got 50 for you. Okay. Okay. So Emily Otson on. Bourbonnais.
I'm here.
Okay. There we go, Emily. All right. We got 50 again. Okay.
Awesome. Thank you.
All right. I think I saw Ruth Lockhart on there. Okay. Ruth, we got 50. Mark Groen, I think I just saw log on. Okay. Yep, 50. And Esther Powers. Okay, we got her. Esther's on. Okay. We got 50. Okay. All right. Again, thank you everybody for participating. And again, we're here to help if you need anything. And next up, I'm going to be, we'll introduce on the phone here is Ryan Eberhardt from Diamond Residential Mortgage. So thank you again. Everybody have a nice day. Thanks.
Good morning, everyone. Good to see you all virtually. I'm looking forward to the next time that we actually get to see each other at Innsbruck. Couple of things here that I just want to go over with you guys. Hope you guys can hear me okay. I'm going to talk about the rates, things that I'm seeing with regards to the market. Forbearance, what we're looking at with respect to credit reports and the lending on how, when clients do that, it's going to impact them when they try to qualify. Quick briefing on some credit scores and what's going on out there in the industry, and then turn times. So I'm going to go ahead and start with probably the big thing is what's going on with interest rates. Obviously, this is a very unprecedented times in the market with everybody being remote. COVID, the election year, the riots, everything that's going on has kept these rates extremely low levels. The anticipation with the markets that I've read, that I've studied, that I've been looking at, the markets are planning on staying at these low levels probably up into the course of election time. Now, obviously, there'll probably be some volatility, but the predictions are, and this is from the chief economist from Fannie Mae, chief economist from Freddie Mac, that these rates could hold all the way through winter, all the way up into next year. Obviously, now's the time for anybody out there to be purchasing a house if they're in the market for that because of the buying power. I mean, people are getting $50,000 to $75,000 more on their money now, which is something you can relate to them than what they did before because the rates are over 1% better than probably where they were last year. On average, if your clients are asking you, standard 30-year fixed rates right now with excellent credit is still hovering in the high twos. Okay, so I mean that's amazing. I mean, I never thought we'd see these rates like that, but I mean these rates are still hovering in the high twos. Some days you might get down, an eighth better, maybe 2.7. But majority good qualified clients, these rates are running right around 2.7, 2.8, right around that ballpark arena. Big thing I want to talk about here as well is forbearances. Okay, obviously the government made an announcement back in March. You guys can go ahead and put your loan in deferment, forbearance. They never really talked about the repercussions of this. All right. Here's the biggest and most important thing I wanted to tell you guys. When you are listing a home or you have a new buyer, okay, if they own a current home, please make sure that you ask the client if they have put their loan into forbearance inadvertently or, not intentionally, whatever they want to say. See whether or not they put their loan into forbearance. And here's the reason why. When a lender like myself pulls their credit report and registers this loan in forbearance, they're not going to be able to get a loan. Okay? Because that to us proves that they don't want to pay their current mortgage. So why does any lender out there want to give them money to buy a new home? Now, there are some exceptions to that rule. If you can prove that they've actually have paid their mortgage current. They did it as a precautionary reason. But majority of the time, these clients, your sellers, your buyers, they don't even know they did it. They just put it into forbearance. They thought it was a great idea, and they don't realize that they actually have to pay this money back, okay? If you have a client currently that is in forbearance or is trying to sell their house and they are in forbearance, or you have a buyer that is selling the house and they're in forbearance, what they need to do is they need to get their credit report corrected. They need to back pay those payments, pay the payment current, and then tell the mortgage company, whoever the servicer is, to take them out of forbearance and to report them as current. Okay, I assure you guys that this is a big thing that's going on out there. I can't tell you how many deals I've had to bail out and close over the past 60 days because of this, to try to correct people's credit reports. Deals falling apart because the lender's not telling them at the last minute. So please make sure that you guys do explain this to the client that they're in forbearance or they're going to be putting into forbearance. Make sure they're taken out and they reflect on the credit report correctly. Obviously, that might open up a bunch of questions. You guys all have my email, you have my personal cell phone, you have my contact information. If any of you guys have questions about this after the call or anything that I've spoken about, please feel free to reach out to me. I'd be more than happy to discuss with you guys. Next thing I want to talk about is credit criteria. Right now, currently, obviously you have your conventional loans. They're still going down to 620, okay? Your government lending is pretty much capped around 600, okay? Now, there are some exceptions, I would say, to that rule, less than 600, but it has to be a pretty good reason why they're under 600 for their credit rating. But currently, if you have somebody that, is 600 or above, FHA, VA, or USDA, they still can qualify for a loan, okay? We got to run through the system and do our due diligence, but that is the minimum credit score requirement that we are seeing out there. That's pretty much generally accepted. Now, you do have companies out there that will have a higher requirement, and you might have a company out there that has a lower requirement. But I could tell you right now, we sell directly to Ginnie Mae, okay? So we sell right to the source. We also sell directly to Fannie Mae. So we're getting this guidance right from them. And I can tell you that anything less than a 600 score is extremely tough to get through and has to have a very good explanation. So I know that there's probably some miscommunication or some misunderstanding out there that, companies, you got to have a 720 credit score right now to get a loan. You got to have a 680 credit score right now to get a loan. I just wanted to make sure that everybody was on the same page. And to clarify that you do not need that type of credit score. You can still do an FHA loan at 600, a VA loan at 100% financing at 600, a USDA loan at 100% financing at 600. Fannie still has their 3% down home ready products. They still have their 3% down, conventional loans. So, on that aspect there, nothing has really changed, I would say, except maybe, the correct criteria on FHA and VA. Last but not least, what I want to talk about real fast is obviously our turn times regarding the market and appraisal orders. You guys all have probably witnessed how long has been taking for appraisers to get out to your properties. Sometimes you get lucky and they come out in a day or two. Other times it's 2 weeks. That's a big problem right now in the industry. It's all bottlenecked due to the amount of refinance volume that is currently going on with the interest rates. Couple that with the amount of purchase business that is currently being presented in Northwest Indiana. These appraisers are at their limits. They're obviously trying as best as they can. And I'm not just speaking on behalf of Diamond Residential Mortgage. I've spoken to many different lenders that are local in our area, and they're having the same problems, and it's hit and miss. My recommendation is obviously, when you guys are out there, you have an accepted offer. I understand people want to close in 30 days. I get that 100%. Our standard turn time right now, as long as we can get through inspections quickly and get our appraisal back, we're still closing loans in 30 days. Sometimes sooner, maybe a couple days later, but on average 30 days on a contract. My recommendation, though, is when you guys are out there, please prepare your sellers that, maybe it's okay to go 45 days just in case if it takes about, 2 weeks to get an appraisal back, or just in case that, it takes a while for a home inspection to get back. Again, I understand on both sides, selling, buying, you want to get the house closed. This offer has a 30-day offer. This offer has a 45-day offer. It's perfectly fine. Just make sure that, everybody is on the same page with regards to the appraisals and the turn times, because the last thing is, the hardest thing to do is to control that. I can control everything up until that point. I can't control how fast I get an appraisal back. And the last thing I like to do is, have to extend a closing date because I can't get the appraisal back in time. And now we're, basically, 3 or 4 days after closing. So that's in a nutshell kind of what I wanted to talk about today. If you guys have any questions whatsoever, please feel free. You can call me on my cell phone, or you can email me, whatever's convenient for you guys. I'd be more than happy to talk to you. So with that being said, I'm going to turn the meeting over to Matt, and it's great to see you guys. Thank you.
Okay, thanks, Ryan. Hello, everyone. We are really excited to partner with Earnestly by Payload, which is a leading RE recommended vendor, to offer digital earnest money deposit payments for your buyers. And these would be buyers for your Just give us 1 minute here. We'll get a few slides up for you to show you how easy this is. You good? Hopefully you can see the slides. If someone can let me know. Yes, okay, very good, thank you. McColly.com website on the home page. Once a home's under contract, you go right to the home page with your web browser or mobile device. And on the top, you'll see buyers, sellers, and submenu earnest money. On the second slide. On the second slide, once it comes up here, you'll see how easy it is. The buyer fills out their contact information, the property address, and the buyer agent, which may or may not be a McColly agent. Notice on the bottom of the slide, they'll fill out their checking information, and there is a $7 convenience fee. Now this is 1/5 the price of a wire, and we haven't had any pushback in the testing that we've done so far. So I think it's a very small convenience fee, and hopefully you'll agree. So if they're remitting $1,000 escrow, they're going to be charged $1,007. So on the next slide, on the third one, once a payment's made and they click the pay button, as you can see, a virtual check will come up. And so they'll confirm the amount, confirm the banking information, hit submit, hit pay, and instantly accounting will receive an email confirming the receipt. We will forward this to the listing agent and to your SkySlope account so that you have it for backup. And this email will be support for your earnest money deposit form, which is still going to be required because you'll use it to request earnest money for closing, right? Other methods are still fine. Sending checks, no problem. We don't prefer wires. They're just, we've talked about the risk with wires. They're risky. They cost 5 times as much as this might. We really don't want wires anymore. So we think this is a super convenient way to remit escrow, especially in this COVID environment. And we hope you get the word out and use it. So if you have any questions on Earnestly, put them in the chat box, and we will get to them. Julie had a question. Okay. Yeah, is this Julie had a question? Is this similar to PayPal or Venmo? Yeah, in a way, it is. It's on the ACH platform, which means that it'll take 2 to 3 days to clear your account. So it's not, it can't be used for closing like a wire would be, because that's instant funds. But this is by taking 2 to 3 days, it ensures that it clears the account. We don't have to wait for a check to clear. As you may know, if someone remits an earnest money, we ask for 10 business days make sure the check clears. And unfortunately, on day 8 or 9, we've had checks bounce. So with this system, we'll know within 2 to 3 days if it cleared or not. So that takes that risk out. So in a way, yes, it's like Venmo or PayPal.
We get a lot more questions. You want to take them now?
Sure. Let's take a few more questions on this. How secure is this? Yeah. As you can see on the bottom, it says PCI Level 1 Certified Processing Platform. It's been vetted by myself, and more importantly, Leading RE has taken a look at them and vetted them also. We use their portal, but it's marketing as a McColly branded service, but we're confident about the security. So Kathy Camp Burke is asking, do we get a receipt for our files and for the lender? Yeah, the receipt will be the email that I get instantaneously once they hit the pay button. I'll forward that to you if you're the listing agent. Let's see, but just be sure to have your listing in SkySlope so that I can populate that the SkySlope file for you.
Sonia, are we getting an email notification once we
Yeah, Sonia, are we getting an email notification once they make the deposit? Yeah, I get it instantaneously. It goes to accounting, and like I said, we'll forward that to you as a listing agent and to SkySlope. So you will get it the same day as we do. All right. Ruth is asking, some buyers use cashier checks. Can they still do this? Of course, they can still use personal checks. This is just another, I think, a better option if they so choose. Particularly with the Generation X and those folks, we might not have checks. Okay.
Just to clarify, this is my listing another agent.
Yeah, so Mary Beth Myers asking, just to clarify, if this is my listing and another agent brought the buyer, I assume it's my responsibility to let that other agent know about this option. That's exactly right. Very simple steps. You'll refer them to the McColly website under buy, sell, and then earnest money. That's right. Okay, so that looks like all the questions on Earnestly. If you have more, you can send them to me by email, and I will invite Nathan over now. We're going to chat a little bit more about some other things. So, thank you.
All right. Well, good morning, everyone. It is good to be with everyone here this morning. This morning, we're going to have coffee with Matt. Matt's just been sharing a bit about Earnestly, but we're going to chat about an area of Matt's expertise that I think is really, really important this time of year. And I've had the privilege over the last 3 years of working closely with Matt on a daily basis. They say you should surround yourself with people who are smarter than you. And definitely every day when I come to work and get to work with Matt, that is definitely the case. But just by way of a bit of background about Matt, in case you've not had the opportunity to converse at length with him, Matt's been with McColly for 5 years now, took over the CFO helm when Gene Johnson retired. He's a CPA with a decade of experience in public accounting, 15 years as a finance director at various positions in Chicago. He is married to Karen, 2 grown children, 2 very young granddaughters, and 1 border collie. Just specifically a bit more background. Prior to McColly, Matt served as the North American Finance Director for Mercer, which is a global consulting firm in Chicago. And prior to Mercer, he served as a controller at Chicago Specialist, a broker-dealer in Chicago. Prior to that, about a decade with Kenneth Leventhal and Company, now Ernst and Young. And to put it lightly, Matt has a wealth of experience, wealth of knowledge, and he and his team here at McColly are to be a resource for you. We're going to discuss 3 areas today. You're going to see them on the screen to help them break them down a little bit. If you have any questions as we go through today, please feel free to put them in the chat box and we'll get to them at the end. I know a couple of folks over the weekend have submitted some questions, which you appreciate, and we'll get to the end. We'll get to those when we get to the end of this presentation. So without further ado, Matt, thanks for being here this morning. We appreciate it. And I guess to get it rolling here, as we approach the end of 2020, tax season is looming right in front of us. There's a need for good financial tax planning. And I guess roughly as we begin, what general suggestions would you have for our broker agents for their taxation and financial success?
Yeah, I'd say my first suggestion, it may surprise you because it's not tax or accounting related, and that is use the McColly technology tools to their fullest. And that's the McColly Suite, that's the McColly Connect, the SkySlope. They're all great tools, and you need to use them to the fullest because they do a number of things for us. They make our agents more efficient. They allow for the documentation flow to flow very efficiently. This in turn allows our agents to close more deals and make them more profitable, right? And let's face it, that's really what we're here for. We're here for our agents, make them more profitable, make them more efficient.
Okay. So in addition to utilizing the technologies that we have specifically here, are there any accounting software, things of that nature that you would recommend our agents engage with?
Yeah, you should use accounting tax software. You're going to encounter a lot of data throughout the year. And what we like to use the term, make order out of the chaos, okay? So you want to make that, you don't want to make it a burden, the administrative burden. So you need some decent accounting tax software, a lot of good ones out there. And finally, you need a decent accountant or financial advisor, or preferably both. These folks will keep you on the right path and actually keep you out of trouble.
I think that's such a good point. Oftentimes when folks ask us in the industry and our broker agents, well, why should I use an agent? We're able to tell them all the additional advice we can give to them to bring them through the process. And that's one thing that I've always encouraged folks to do as well, is find a good financial advisor, find a CPA who not just does your taxes, but who gives you good, solid advice. They should be trying to assist you beyond just the work that they're doing for you, giving that good advice. So really appreciate those suggestions. So let's break it down just simply. First, I want to discuss taxes. Matt, just share with us, as a real estate broker associate, how am I taxed?
Yeah, real estate agents in McColly are not employees of McColly. They're independent contractors, so they're their own unique, they're their own business. Okay, so you have to treat them as such. They should have their own cash account at the minimum, and for the most part, they're taxed on what we call the Schedule C on their 1040. It'll just show the profit from business or loss for their real estate business. Okay. Now the revenue component on that Schedule C comes from us. It's the 1099 form that they get in January. Now the expense side, that's where the agents come in. They have to, and that's where the good software comes in. They have to come up with all those deductions. You know, the meals, the supplies, the auto expenses, and such.
What recommendations do you have for our agents? Because I know personally, when I get to the end of the year, if I haven't tracked it through the year, I'm looking at my credit card receipts. So is there any recommendations that you have as to how we can track expenses throughout the year?
Yeah, one popular software that I'm familiar with is QuickBooks Self-Employed. Costs, I think, $7.50 a month. I mean, really cheap. It does a lot of things. It captures your receipts. It tracks your business miles, and that can really add up. So that's just one suggestion. There's other accounting software out there, Sage, MileIQ, a bunch of them.
So Matt, you've mentioned tracking your miles. Based upon your years of experience, is it really worth it to track my miles, or is it more a pain, so to speak, to do that?
Well, it used to be a pain because you had to keep an auto log. Okay, you don't need that anymore with the software I suggested. QuickBooks Self-Employed. It'll track it for you, and at 57.5 cents per mile, per business mile this year, that can really add up. Because if you think about it, if you're if you're a busy agent, you can log in, 10,000, maybe 20,000 business miles a year, and at 10,000 miles, 57.5, that's $5,750 deduction just right there.
Right, to quote you, we're not talking about lunch money at that point. So, so we've talked a little bit about some of the tools that we have out there to track our expenses that you can do yourself. When it comes to end of the year taxation, submitting to the IRS, Department of Revenue, is this something that you recommend our agents do themselves, or should they consult a professional?
Well, for those that have the time and expertise and desire to do your own taxes, fine, get good software, but I really wouldn't recommend it because you want to do what you do best, and that's sell real estate. It's kind of like, getting your oil changed. I mean, I used to do that. I don't anymore, right? I paid $40 to get it done.
Right.
It's just not worth it to me to do that anymore. And it's kind of, that goes with taxes.
About 8 years ago, I'll never forget, my wife turned from being a full-time employee to working as an independent contractor. And I remember we got to January the following year, and we're sitting in the living room and she's crying because we didn't set aside any funds throughout that year to pay Uncle Sam. And finally, when I went through TurboTax, I realized, holy smokes, we owe a lot of money to the IRS that we didn't set aside. So I guess when it comes to those sorts of scenarios, what general recommendations do you have to avoid being in my shoes where you hit the end of the year and you're scrambling for cash?
Yeah, you need to pay estimates through the year. Okay, Uncle Sam requires us to pay throughout the year. We have what we call a pay-as-you-go system in the U.S. where you earn the money, you're supposed to remit taxes and not wait till the end of the year for one lump sum like you must do.
Lesson learned. So when it comes to trying to figure out how much to set aside, what are some general recommendations that you have for our agents as to how much to set aside?
Well, you certainly want to work with your tax advisor on how much to remit on the estimate dates. And there's 4 dates throughout the year: April 15th, June, September 15th, and January 15th of the following year. So based on your production throughout the year, that number is going to change. Okay, so that's where you really need to have either a really good software to help you predict that, or a decent tax accountant, all of which would be able to help you with that.
Okay, and if you do hit the end of the year and there is a cash crunch that you're experiencing for a brief period of time, would you suggest that an agent not submit their taxes, or what should we do at that point?
Well, you always have to submit your taxes on a timely basis. There are extensions, of course, but even if you don't have enough money to pay your taxes, you still need to file, pay as much as you can. The IRS is going to send you the bill for the difference, right? Hopefully, that's far better than putting your head in the sand and ignoring the situation. Because let's face it, the IRS knows you're out there. They expect the return. Don't ignore it.
Do we have any programs here at McColly that come out of your office that can help our agents with the payment and setting aside of those quarterly funds?
We have the ability to withhold taxes, your commission checks. So this is much like receiving a paycheck, right? Where your net pay is net of the taxes withheld. It's a really great system. We have many dozens of agents already using this. And what it is filling out a one-page form you can find on McCollyNet, or McColly Connect rather. And we will withhold a certain % of your net pay and cut a check to you on each of those 4 payout dates. Give you a couple weeks lead time, and you'll use those checks to remit your estimated taxes.
That's awesome. I know we've got a significant number of agents that have utilized that first-time program this year. I want to encourage our agents, if that's something that you'd like to do and have Matt's department help with, that's certainly something that we can get set up even right now, starting this month, correct?
Yeah, you can start at any time. You don't have to wait for the beginning of the year.
Absolutely.
And you can change it at any time too. You'll give us the percentage to be withheld, and we'll do just that.
Right. Now, sometime I'll hear folks talk about seeking an extension when it comes to their taxes. Can you share a bit with our agents as to what is an extension? Is it a bad word?
An extension, there's an automatic extension time to file from April 15th through October 15th, which, by the way, is coming up real fast. And I notice it's an extension to file and not pay. Okay, so when you file an extension before April 15th, you have to submit, all the taxes due for the prior year, right? You don't have an extension to pay the taxes.
Okay. Now, in the legal world, we love extensions. Courts hate them, but it's always fun to get an extension. You just punt things off, and your clients look at you and say, "Well, you're just lazy." I mean, do people approach accountants and say the same thing? Well, why are you getting me an extension? Or how should we respond to our accountant when they say we suggest you get an extension?
Wouldn't it be great if lawyers had an extension?
Come on now.
Well, extensions, some people think they're a bad thing. Okay, they're really not. Let me tell you why. Accountants suffer from what we call work compression. Okay, they have to do a tremendous amount of work from January 1 to April 15th. Now, I say that not for you to feel sorry for them, but it's just a fact of life. It's better to go on extension, take your time, get your return right, and not have to amend it. Don't prepare your return under duress, basically.
But if I file an extension, does that increase my chances of being audited by the IRS or Department of Revenue?
No, not at all. IRS has made clear it has no bearing on your chances for audit.
Okay. Well, some good information when it comes to taxation, so appreciate you sharing that. I just want to dive just one more step deeper into the area of taxation, and I've seen that some of our agents have set up either an LLC or an S corporation that they're operating their practice out of. From a financial tax perspective, are there any benefits to setting it up that way?
Yeah, that's a tough question because there's no one right answer. Okay, each individual is going to be different. Now, in theory, there are some possible tax savings if you were to incorporate, pay yourself a reasonable salary, and then you may avoid the FICA taxes on the difference on the profit differential. Okay, so that's, in theory, that's possible, but you got to offset that by the costs of setting up a payroll system, paying monthly and quarterly payroll taxes, filing the corporation documents and stuff like that. So I think it's really more of a legal question than a tax and accounting question. So why don't I turn it right back to you, and you can answer that.
No, and you make a really good point. And I think the key answer is to sit down with both a legal and a financial advisor, if you're married, significant other, to talk to them and say jointly, here is the collective income that we have. Here's the cost to get it set up. Here's the anticipated income that we're going to have. And if after you're going to pay yourself a reasonable salary and there's money left over to be distributed as dividends, your financial advisor should be able to tell you, based upon that your tax savings, if you were to remit it through an S corporation, will be X. And you look at and say, well, my costs are Y, to see if it's really worth it at the end of the day. So having a good team surrounding you can really help advise you as to whether or not it is good for you. So good. Last question when it comes to taxes is 2020 has been a highly unusual year. COVID has thrown a huge monkey wrench into some things, as well as provided some benefits to a certain extent that we've received throughout the year as well. Is there any new tax laws that COVID has affected and or changed that we should be aware of when we look forward to our taxes next year?
Yeah, some highlights for you. There's a new charitable deduction, above the line deduction this year, $300. And above the line means you don't have to itemize in order to take the deduction. So these charities are, lawmakers recognize these charities are really hurting in this COVID environment. So I think that's why they passed it. It's a good law, $300. Stimulus payments, if you receive $1,200 per taxpayer, $500 per child earlier in the year, those are not taxable. You don't have to report them. EIDL advances, these are economic injury disaster loan advances that you may have received in the beginning of the year for self-employed individuals. Those are not taxable, so you don't have to report those either. And finally, unemployment compensation. You may have availed yourself of the new laws for unemployment comp for self-employed individuals. Those generally are taxable, so you have to report them. You may get a break on some states. They go through a calculation. May not all be taxable, but you will have to report unemployment comp.
Okay. Now, communications with the IRS, I've noticed just over the past 6 months, anytime I help an agent, getting to a closing, trying to do a payoff, coordinate with the IRS, it's really delayed. Are you experiencing that? Other colleagues that you know in the field, communications with the IRS?
Yeah, I've spoken to some of my colleagues who are still out in public accounting, and the situation's gotten better. What's happened is there's been a mismatch. Electronic filing and then the tax remittance by mail. The mail's just stacking up, waiting, whereas the filing's already there. So they're getting correspondence, unnecessary correspondence by the taxpayer. So if you get some correspondence that you didn't anticipate this year, don't panic. Take it to your advisor, and chances are it's just a timing issue that will resolve itself pretty quickly.
Understood. So we've talked a bit about paying taxes. We've talked about structure to avoid paying taxes, limit taxes, but I'll transition a little bit to building wealth. What general suggestions would you have for our agents as to how to not only pay less taxes, but how do we build wealth?
Yeah, I think one of the ways to build wealth is to defer income. Okay, and what does that mean? So that means you earn income now. You don't receive it, you earn it, but you receive it and pay taxes on it at a much later date, sometimes years later. Okay, there's a number of ways to do this. You can open up a Sept IRA. With Sept IRAs, you can open them up at generally any bank, brokerage firm. Wells Fargo's opened it up for many of our agents. You can put aside 20% of your profit, your Schedule C profit, up to $57,000. It's a huge number. Likewise, a solo 401k. You can do likewise. You can only have one employee on a solo 401k. $57,000 is the limit again. And finally, McColly's Performance Plus. You can defer up to $10,000 this year, every year in Performance Plus.
Share with us a bit more about McColly Performance Plus. What exactly is the program?
Yeah, we've had this program since, I think, 2001. It's a great program. You can elect to defer up to $50 to $200 per transaction, and we will accumulate that, invest it for you for 5 years, and then pay out after 5 years. So you have 3 different investment options. One's Berkshire Hathaway tracking stock. Another is S&P 500 tracking stock, and finally a fixed income option, minimum 3%. Now we have 3 options because everybody has their own risk tolerance, right?
Right.
But to give you an example of how this is performed, I mean, we had our Performance Plus dinner in January of this year before all the COVID stuff.
Right.
And we dispersed 2014 deferrals, and the maximum you can defer back then was $6,000. For those that deferred $6,000 and invested it in the Berkshire Hathaway, they received $11,314. Wow, they almost doubled their money. I mean, that shows you the power of deferral. Taking a large pot of money, don't reduce it by taxes, and letting it grow over a period of time.
So for agents that want to participate in that program moving forward, is there a specified time period that they have to sign up for that for next year?
Yeah, IRS, we are limited somewhat by IRS requirements. It is a non-qualified plan, but nevertheless, there are some requirements. One of them is you have to sign up ahead of time, and you can't sign up unless you're a new agent, okay, thereafter. So you elect in fourth quarter for the following year. We'll be getting those invitations out at the end of November and in December. You want to sign up at that point, elect how much to defer and what investment option.
Very good.
Yeah.
Well, Matt, we appreciate your time this morning. I think that kind of takes us to the end of the planned questions that you and I had talked about back and forth. We've got a couple of questions that folks have submitted over the weekend, and then we'll see if we have any questions for folks who have come on board here. So I think the first question that came in over the weekend was, how can I make sure that my commission is paid as quickly as possible?
That's a great question. I'd ask the same question if I was an agent. Number one, make sure SkySlope is populated on an ongoing basis and swiftly. Because SkySlope forms the basis of really your commission payout. You may not know that when you populate SkySlope, you enter the buyer, seller, the mortgage company, and the title company, right? All that contact information, the selling price, the closing date. Well, guess what? All that information gets fed into LoanWolf, which is our accounting and transaction system. And that forms the basis of the calculation for the payout. So if there's a problem down here at SkySlope, we got to stop and fix it, basically. So it's really important that agents populate SkySlope correctly, and that'll ensure, that's the best way to get paid swiftly.
Understood. Second question that came in is, can I file a tax extension on my own?
You can. It's a one-page form. Yeah, there's nothing stopping us. It's form 4868, I believe. But that's if you have a tax advisor, you're better off letting them handle it, because they'll archive it for you and can prove that they submitted it.
And that was actually a question I think came in from one of our agents. What was the name again of that form, Matt, that folks would use to file for that?
For form 4868.
4868?
Right.
Okay, very good.
Extension. That's the automatic 6-month extension.
And if folks do have a question on the payout on their commission, it's another question that's come in, who would you suggest that they contact in your department?
Yeah, if they have a question, I'm glad someone asked that, because inevitably you may have questions on your payout. So you can ask me, you can ask any of my team members, Sandy McColly, Sharon McLaughlin, and Pam Smith. You can ask any of us, okay? And keep in mind, and this goes back to using SkySlope correctly, right? We're gonna transact about 4,600 sides of business this year. I did the math. That averages out to 17 a day every business day, and 13 a day if we don't take the weekends off. So it's really important that everything be, we try to standardize as much as possible, and that removes any anomalies on the pay cycle. Okay. But certainly, if you have any questions, we'd be happy to answer them as quickly as we can. You can email me at any time.
And if folks want to use your department to do the quarterly set-asides, from what I understand, the withholding form is listed in McColly Connect. It's called Tax Withholding Agreement Form for Broker Associates. So if you want to look and connect, that form is in there. Then agents can send or drop off that form at your office, correct?
Correct. That's
Okay.
right.
We've got another good question coming in. Matt, I actually discussed this one last week when we were preparing for today. And that question is there any difference in home office deduction this year?
Yeah, the home office deduction. That's there is an alternative method for home office deduction, and there's been a lot of chatter out there about, hey, in this COVID environment, I probably qualify more likely for the home office deduction, right? Well, not necessarily, because guess what? You have an office. Each of the agents have an office to go to, right? So it's really, to me, it's hard to justify taking the home office deduction when you can come here in Cherville or use your 4-digit number or whatever it is and go to any office, really.
So I can't take the biggest room in my house and turn that into my home office space?
Talk with your tax advisor, but it's a risky business doing that.
Right, no, understood, absolutely. So, any other questions? Sure, we'll quick cut back. Katie had an Earnestly question. In regards to the Earnestly deposits, the question is, I have an agent asking if it allows deposits of $10,000 or more for higher end listings that require a large earnest money deposit. Do we have a limit on the Earnestly program?
Great question, Katie. The limit is $25,000.
Okay.
Yep.
Very good.
Yeah.
All right. Not saying that we recommend to go that high, but sometimes we will have folks that want to foresee issue and request that large of a sum be sent in. So,
Right.
Well, Matt, thank you for the time this morning. We really appreciate it. Again, if anyone has any questions as it relates to the financial investment side of things, please don't hesitate to reach out to Matt and his department. We greatly appreciate the work that you and your team do. I think to close out here, I'm going to invite our general manager, Tracy Paris, back up here. She has a few closing remarks. I'm going to briefly transition away here, put the podium back
I
up.
don't need the podium. I'll just sit down.
Very good.
My knee brace on is probably better. So, good morning, everybody. So that was the analytical side of the company. I'm more of the heartfelt side of the company. So in closing today, I just want to share with you that I've been working on my development of attitude of gratitude. Ninjas know that as part of the Ninja Daily 9 routine is that you should start your day off with a gratitude. I'm often asked when I meet with agents from other companies, what is it that you like most about McColly? And I always tell them it's the infrastructure. But by infrastructure, what I really mean is you guys. I mean you, the agents. I mean Matt and Nathan, Monica, Rhonda, the whole corporate staff, the administrative staff. That's our infrastructure. That's what makes us different. So I simply say McColly Real Estate is special to me because of the people that I work with. Something we can also be grateful for here at McColly is that your hard work has given us the opportunity to grow by 3.6% in the number of sites from last year. I'm grateful for that. Connect might have something to do with that. That is also part of our infrastructure, are the tools that we have brought here to McColly Real Estate. The Connect tool is a great competitive advantage. Connect allows, as you know, the ability to connect from one office to another. And when I'm meeting with agents from other companies, what I'm finding is that that's a huge tool because they don't have that. They don't have the listing inventory, number one. As a matter of fact, I shouldn't say this probably, but I was meeting with an agent last week who's considering making the move, and they had 2 active listings in their office. And this is a franchise, 2 active listings. We have probably in Indiana alone, at least 600. Wouldn't you say that, Matt? So the Connect tool doesn't work at all companies. McColly exclusive listings just do not work for another company having an exclusive carousel because they just don't have that inventory. And it's because of you guys that we have that. So in closing, I would say we are grateful for all that you do. So I'm just trying to work on that every day. Wendy Embry, you keep me working on my gratitudes every day. It's hard to not be grateful when you work with Wendy every day. She won't let you not be grateful. I know she's laughing on the other side of this camera. This is hard to do when you don't get to have interaction with everybody. So I hope you can appreciate that. So with that, I'm thankful for all you do. I'm thankful to the staff here at McColly. And I'm also thankful we don't have to bring lunch today because John Rostenkowski is having an open house, broker open house today for a $1.1 million listing in St. John at 8315 Meadow Lane. And that is from 11 to 12. So you can check your Connect for details, but you don't have to make lunch today. So with that, thanks for attending our first virtual meeting. And thank you.